Okay, I feel like we're all adults here, or at least we should be. According to my YouTube analytics, the average age is between 35 and 45, so I'm just going to tell it to you straight. This could be one of the most exciting weeks for Tesla stock you have seen in a very long time, and it's really twofold. The events that could play out, the data that we're going to get this week could very much benefit Tesla. And you're coming off of the robotaxi unveil news that happened Friday and after hours that sent Tesla stock up almost 4%. At the same time, Tesla stock is heavily short, and that could obviously lead to more upside pressure as short sellers start to cover on some of their short positions. At least if they're smart, they do. But Wall Street isn't the smartest all of the time. After all, they still think Tesla is an auto company. Topic for another video. But here in this video, I will go over all of your major events, my expectations, and where I think Tesla stock can go. And again, we're all adults here, so come to your own conclusions and do your own due diligence and let me know what you think about this information, my opinions, down below in the comment section, and feel free to give your opinions down below as well. So let's really break this video down into two parts, because there's a couple different specific catalysts that I think could be positive for Tesla stock, including economic data, and we'll look at that later on into this video. But I think the first part of what is already started to positively affect Tesla is clearly that news we got Friday and after hours about the robotaxi network. Now, here's kind of the deal with that. Back in 2020 and 2021, Wall Street, they were all looking forward to the robotaxi network. It never happened. It hasn't happened yet. And yes, you've seen a lot of improvement in FSD since 2020, 2021, but V12 has totally changed the game. And Wall Street was basically asleep at the wheel and kind of drunk behind the wheel at the same time, which are very bad combinations, thus leading to the highest short position, largest short position we have seen in Tesla stock in many years. They're really at a very vulnerable position. With that said, back in 2020 and 2021, some Wall Street individuals like analysts and hedge funds were modeling in the robotaxi network to come in 2024, 2025, and they were assigning a certain valuation to Tesla stock based on that. Well, it didn't happen, so they had to kind of cut that out of their model. But that opportunity is just so damn large, like huge, upon levels in which you cannot imagine. Like if the robotaxi network is globally in, all of the developed world, or let's say 70-80% of the developed cities on the planet, and let's say Tesla can take a 20% market share of the ride-hailing services out there, dude, you're looking at Tesla stock, a $10 or $20 trillion company. It will impact your life big time, okay? And that's not to mention just, cars out there that can drive themselves that are not on the robotaxi network. Like the utility in which people will get, saving thousands of lives, potentially hundreds of thousands of lives globally just from car crashes. Longer term, that is going to be a huge business. Now, how far do you model that out into the future? I think there's still some questions. We don't know exactly when Tesla is going to launch the robotaxi network. Going along my lines of what I believe, I don't really think the timeline changed for the Model 2. I still think the Model 2 is coming second half of 2025, but instead of the Model 2 being sold to customers for personal uses, I think the first thousands, let's say 10, 15, 20,000 robotaxis that are manufactured in Giga Texas, the Model 2s, will happen in the second half of 2025, but they will be robotaxis, meaning you will not be able to order a Model 2 until probably 2026 or 2027. That means if that timeline is correct, then you could be looking at the robotaxi network second half of 2025, beginning of 2026, and the rate of improvement we are seeing on FSD V12, honestly, that timeline could be a little conservative, right? If you start to get the miles driven on FSD really ramping up like we're seeing. And just for context, back in September of 2023, feels like not long ago because it wasn't long ago, Tesla only had about 170 million miles driven on FSD. Today, 2 days ago, they just crossed over 1 billion miles. Elon said it's not going to be long before you're over 10 billion miles driven. Elon said back in 2016 during his Part 2 master plan that he estimated it would take about 6 billion miles driven on FSD to create a level 4, level 5 system. And you need the level 5 system essentially to do robotaxis, right? No steering wheel, no pedals, all autonomy, right? No humans involved whatsoever. So that could be coming in the not so distant future. Okay. And I think you can start to model that. I think Wall Street will start to model that. I think that's why Tesla stock went up 4% in after hours, because this actually makes a difference to longer term estimates for EPS for 2026, especially for 2026. If we do get the launch of the robotaxi network in the same timeline as the current projection of the Model 2, second half of 2025, that's a big deal. Now, with that said, you could be looking at a potential short squeeze because everyone's been so bearish. And we'll talk about the short squeeze aspect of this towards the end of the video, but nonetheless, if you're a Wall Street money manager, you have to start thinking about robotaxi and what kind of potential that could be for Tesla. And well, it's huge. It's magnitudes larger than the potential for Apple or for Microsoft or Google or any other AI stock out there. And that's another important part as well. Tesla has not been grouped into the whole AI stock category. And I think you kind of need to start grouping Tesla into the AI stock category if they're literally launching pretty soon real world use cases for AI like self-driving cars. I mean, Tim Cook, Apple's longtime CEO now, he said back in 2017 that self-driving cars were the holy grail, the mother lode of AI. Stand corrected. I didn't want to paraphrase that too much, but back in 2017, Tim Cook said, we sort of see it as the mother of all AI projects to get autonomous systems in cars. But after all, I think it's important to remember, I don't know when the markets may start to look at Tesla as an AI stock. It may be starting this week. Part of the 4% rally could be just that, right? And a lot of this will come down to algorithms as well. 80 to 90% of the trading activity we see each and every single day is done by trading algorithms. So we'll see if the algorithms start to trade Tesla like an AI stock. If that does happen, you could see a higher multiple valuation and stock price for Tesla. But I think that really takes a couple of months for everyone to really get into the whole narrative that Tesla is more than an auto company. It's really an AI company. It's not going to happen overnight. Now to the second part of this video. Really, your data this week could be quite bullish for Tesla. And I'm specifically referencing CPI. So on Monday, you have Fed Kashkari that speaks at 7 p.m. You have consumer inflation expectations. That could be important for the month of March. This is 1 year forward looking, expecting a 2.9% number. That comes out at 11 o'clock in the morning on Monday. On Tuesday, you're not going to get much. 3-year bond auction, some oil rig counts, but nothing impactful. It's really Wednesday when you get your CPI, your core CPI and your headline CPI month over month and year over year. So basically, you're expecting CPI to fall at least a little bit. Core month over month, which is the big number everyone pays attention to, for the month of March is expected to fall from 0.4% last month to 0.3%. Core year over year is expected to fall from 3.8% to 3.7%. So one tick lower for both of these, which is good. That's better than a flat or rising CPI, but it's not like that great. Right, 0.3% times 12 is still 3.6% on an annualized basis. That's still well above the Fed's 2% target, but it's better than 0.4% on an annualized basis, which is 4.8% on a 12-month annualized basis. So some progress is expected. Headline inflation month over month is expected as well to do the same thing as core, go from 0.4% to 0.3%. year over year CPI is expected to actually rise from 3.2% to 3.4%. And that's what we've talked about here on this channel for a while. You've seen inflation come down so much in 2023. Your year over year comparisons start to get a lot harder, especially for your headline. And I think the markets, they're not going to care much about that. They really are going to focus on your month over month numbers, because that's what is going to drive the Fed to, hold rates where they are, cut rates, or maybe even raise rates if inflation were to, continue higher. Now, here is kind of the snitch of inflation, if you will. This is what is screaming to us that you're probably going to get a much weaker inflation report than what the markets are currently expecting. So what I have here is what I've already mentioned before here on this channel, but I want to make it very clear for everyone to keep this on the radar. You had the ISM services prices last week. Now, that is this blue line here. The grayish looking line is your month over month core PCE. Now, you could do, CPI as well. Core CPI, you do that month over month, add that to the chart as well, and that just looks a little strange on the chart, but we'll just use PCE, okay? And these basically follow each other pretty much to a T, okay? If you see prices fall, you typically see inflation fall. If you see prices rise, you typically see inflation rise on a month over month basis in the services area of the economy. Because really, when the Fed is targeting 2% inflation, you actually tend to see deflation in goods and almost hyperinflation in services. Services is where you really see the inflation. Goods, like your phone, like your TV, like your computer, no matter what it is, right? Commodities, they tend to go down over time because of innovation, because of competition. Services, on the other hand, tend to go up because they're very labor intensive, right? You think about the guy cutting your lawn. That's basically all labor besides the gas. You think about a haircut. You think about concert tickets. You think about anything that really is service related. It tends to have a lot of human power behind it. And it tends to be very inflationary, okay? So when you see services prices paid that just plummeted, like you seen for the month of March, pretty good odds that you also see inflation come down a lot. Estimates for core PCE are, still at about 0.3% for the month of March. I think that's going to come in way lower. And I think ISM services price is coming in this low. Guys, this is the lowest you have seen since the crash of the Rona. This ISM services prices was substantially lower than pre-Rona. Pre-Rona back in December of 2019, you were at 59.8 points, 59.8. And the number for March was 53.4. I mean, that's huge. That's like, 5 points lower than pre-Rona? That's huge. You're almost in deflation for ISM services prices. That's insane. So odds are CPI comes in lower than expected. Now, as I said in the beginning of this video, that could actually have a negative impact to the S&P and the NASDAQ, to the broader indexes. Because why is everyone buying the S&P and the NASDAQ right now? It's because, hey, if inflation's sticky, we know the Fed's not going to be cutting rates as much. So small cap, interest rate sensitive names, they're not going to do as well. And the companies that are going to drive the growth and the earnings power are your big tech names. So basically, inflation staying high, the Fed staying higher for longer, has kept capital in your big tech names. That has kept the triple Qs, the S&P high because, an Apple's 10% weighting, Microsoft's 10% weighting, Nvidia's 5% weighting, right? These big tech names that benefit from not necessarily benefit from the Fed staying higher for longer, but they're not really negatively affected by the Fed raising rates. Those are the companies that have seen the capital. In all reality, if inflation comes in as I expect, potentially around 0.2% on a core month over month basis, maybe even 0.1% on a, core CPI month over month basis, you could see selling in Microsoft, in Nvidia, in in your big tech names, right? Google, Amazon, all of those big tech names, and see a broadening out of our markets, which could lead capital to go into Tesla and other small cap and interest rate sensitive names. And it would really solidify the Fed should begin cutting rates. So long story short, I am confident inflation is going to come in lower than expected on Wednesday. I do want to remind you guys, like I did in the last video, the NASDAQ sold off quite a bit on Thursday. Remember that you were up 1%. You ended up falling to negative 1.5% by the end of the day. That happened based on geopolitical tensions with Israel and Iran. Now, this is not being political. This is saying if there is a larger conflict in that area, it will have an upward pressure on the price of oil. As you can see, these are the oil tankers in this region going through the Strait of Hormuz, and Iran is right here. So basically, if there's tensions in this area, oil could be restricted at least somewhat, and that could lead to upward pricing pressure on oil, and that leads to higher inflation expectations. That leads to potentially, slower economic activity. In fact, before recessions, you typically see big spikes in oil. Like 07, 08, gas was like $5 a gallon, which adjusting for inflation today would be like $7 or $8 a gallon, maybe $10 a gallon. And what happened right after that big rise in oil prices and gas prices back in, 07, you went into recession. And a lot of you guys probably remember that. I was not driving at the time, but I remember everyone talking about the $5 gallons of gas. And in Michigan, that was a lot at the time. I vividly remember that as a kid. 08? I was born in 99. I'm 25 years old, so I was like 9 years old. Vividly remember that. Okay, so that's why it could have a negative implication to our markets. Something to be watching for. Iran is apparently going to do something to Israel in the next couple of days. We don't know what it is. We don't know what degree it is. I will tell you, a lot of the times, the fear that markets will have around an event like this is larger than the reality of the event. So as long as it's not nothing terrible and doesn't cause a larger conflict, the markets will get over it and probably rally upon unfortunate news. Maybe Iran does, attack Israel. Don't be surprised. Capital markets are the most ruthless place outside of a battlefield that you will ever find. Okay? Markets, full on ruthless. But my point with that is, even if I expect CPI will be good on Wednesday, there is a chance on Monday or Tuesday you do get some bad Middle East news, and that could send the markets lower and, potentially have a negative impact on Tesla as well. Now, on Wednesday, you will get the FOMC minutes coming out at 2 p.m. I don't think we're going to get any huge changes there, so it shouldn't be a big deal. On Thursday, you're going to get PPI month over month. PPI is producer price index. CPI is consumer price index. Consumer price inflation, producer price inflation. Producer prices tend to lead to consumer prices. If you're a company and your prices are going up, your cost to manufacture goods are going higher, or services for that matter. Maybe that could be in wages, right? That's why everyone likes to look at wages, because services, very labor intensive area of the economy. If wages go up, that usually means services are going to go up. Same thing for goods, but to a lesser extent. And PPI can lead into, again, CPI. So expectation here is 0.3% month over month. Last month was 0.6% month over month. So expecting a big, nice drop there. So we'll see. Bunch of Fed speakers as well on Wednesday and on Thursday. So keep that in mind. I'm not going to run through all of them individually, because I think generally speaking, they're not having much of an impact on our markets anymore. This is not 2022 when Bullard would get out there and say the Fed needs to raise rates to 6 or 7% and markets are selling off 2%. It's not that market, right? And Fed officials, they're really saying more good things than bad things right now. You do have on Friday Michigan consumer sentiment. That's expected to fall a little bit from 79.4 to 79. This can drive markets higher or lower. I think by Friday, we're going to have a lot to react to. CPI, PPI, so I don't know how much of an impact this will have, but you definitely want to watch your 5-year and your 1-year inflation expectations. 5-year inflation expectations expected to come in at about 2.8%. 1-year expected to come in at about, 2.8% as well. So, if those deviate up or down, that's usually what causes the markets to fall or rally upon this Michigan consumer sentiment survey. Now, Tesla stock is currently experiencing the highest short interest you have seen in many years. Okay, you have 3.71% short interest off your float, $17.58 billion currently sold short. And as I explained prior here on this channel, you have about 103 million shares outstanding. So simple math would say every $10 you rise from here, if shorts don't cover on short positions, they're going to lose about $1.03 billion. So if Tesla stock does really start to rally, let's say $10 on Monday, another $10 on Tuesday, maybe you're sitting at 190 here pretty soon, shorts are going to be taking a big beating in a relatively short amount of time. And considering how big the robotaxi network is, from a risk-reward perspective, Tesla's the worst performer in the S&P. Inflation may just be coming down on Wednesday. That's not a good recipe for shorts in Tesla stock. Let me just say that right now. So it's not just Tesla, it's also maybe a weaker than expected inflation report. These two catalysts are a good reason to cover on your short position. So it would not surprise me if that happens. Now, at the same time, even retail investors became very bearish on Tesla. A lot of retail investors sold out. So I think you might actually start to get quite the FOMO trade in Tesla. Again, if especially inflation does come in weaker than expected, as per my expectations on Wednesday, wouldn't surprise me if you just see a lot of buying in Tesla this week. Now, in terms of where Tesla could go this week, I think that's just an interesting concept because Tesla could go much higher. I mean, Tesla started the year at $265. It depends if inflation comes in really good, how the markets start to interpret the robotaxi event on August 8th, if shorts start to cover on short positions. In the best case scenario for this week, Tesla stock could be in the 200s. That's the better case scenario. And for that specifically to happen, for Tesla to hit $200 from here, that would be a rise of about 21%. Would I count that out? No. Is that my base case expectation? No. I think a move to that 50-day moving average around 183 looks very likely. I think a move closer to 190 looks likely, but you could find some resistance around that 188 level, that 190 level. If we get above 177, 178, then you're likely to make that $10 move higher to 188. But that would be the gap to essentially fill the gap down, this extended fall that you've seen afterwards, I guess. Technically, to fill the gap, you'd have to get to somewhere around $200 per share. Again, is that possible? Yes. Is that my base case assumption? No. On a technical basis, there's a lot of resistance levels coming up. Again, 178 being the first one. If you get above 178, things look really good, and I think that's going to be relatively easy. As long as you don't get resistance there and you don't see selling pressure come in, you should be golden. 50-day moving average right there at 183.22. And then the 188 resistance. And then after that, you're going to be looking at resistance right at about 200. So like 4 major resistance levels in just the next like $15, $20 higher or so. So it's not like we have a clear room to run. There is resistance. We need to get above that on a technical basis. If we do, then you can start to look at higher numbers for Tesla. I ultimately think earnings on April 23rd, that's probably the catalyst that will seal the deal for Tesla stock. I think from now until April 23rd, I think this could be one of the last great buying opportunities. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.